Greetings, everyone. Again, we have another session that Faster Community event, and after summer of this year, 2021, as you know, after COVID, inshallah, after COVID, we will, and I mean, we will complete this COVID issue, inshallah, at least in 1 year. Not maybe completed, but at least we will be less risky situation, we hope. So we are now as another session of Faster Committee. Of course, fintech side of Faster Committee is very popular and very heavy. And how can I say, the leaders of the fintech side is also the strong side, and they are the leader of their areas as well. And we are proud of this. They are now from two speakers from Asia, three speakers from MENA region, and so a little Asia side. MENA can be count and Asia. So Asia side is now speaking. And just before the beginning, I would like to just mention that as we are talking always technology, digitalization, or this kind of subject, but as you know, in the Atlantic Ocean now producing two big storm, and this two big storm now has may have made some trouble because of climate change. I mean, and the east coast of America, as you know, Mexico and United States, there are two big storms they are struggling with. Not only, of course, just 1 or 2 months ago, we met as Turkey, we met both forest fires and floodings in some of our parts of Turkey. So as these kind of issues as water shortage, climate change, green technology, something this kind of subject now we will be more and more focused even next week as Islamic fintech. One of our subject is green finance and green technology as well. So today, so far, as far as you watch us, you know us about who we are. Not because fintech board is active speakers of Pastor Community and fintech CEO Club. You can see us fintechboard.com. And let me start with here now with together with Hani Idris Bey, Dr. Safa Hanım from Al Qudus, VP Vice President of Qudus University, Muhammad Rizwan Bey from Malaysia, former President of Malaysia Fintech Association. Umar Munshi Bey is co-founder and CEO of one of the prominent and just invested shared Etis Global for Islamic fintech as well. And Fatin Hanım is one of the leader of CBFS, College of Business and Financial Studies in Oman. So let me start with Fatin Hanım just as dynamically, and what do you think about that today our subject is banks versus fintechs or together, and what is the opportunities? What do you think about this? We would like to start with you, please, Fatima.
And thank you so much, Brother Mustafa. In fact, first of all, I would like to say that I'm thankful that something like green technology is going to be covered in this platform. It is very significant these days, as you have mentioned, the bushfires in Algeria or in Turkey, the rising water levels in different countries, the fact that we are actually, if you can correct me, Brother Munshi, even I heard that in Indonesia, there is a change in the capital just because of the rising water levels threat. So all of this means that we have to really think how can technologies nowadays help us to avoid and mitigate any risks and financial risks in future. So I'm really looking forward for the session next week, and hopefully we'll be prepared more to cover what can fintech do in that particular realm. specifically when we are speaking about sectors that are contributing more into the the climate change, the differentiation between emissions and of course carbon emission and the greenhouse gases. So all of these things are very imperative, and we need to think about it from a materiality point of view, while we are viewing the industries contributing to this climate change issue. So thank you so much. You have requested me to answer your question. Is it an opportunity or a threat? In my mind, it is actually both for the banks. It's an opportunity if the banks actually embrace it. And it's a threat when the bank shelve the fintech movement altogether. Financial disruption, has been there all over the years with the banking sector. In fact, the first credit card was invented in the 1950s. In the 1990s, the banks shifted to mobile banking. And as we know now, we have financial technology as the main disruptor for the banks. So it's a challenge for the banks to balance their activities and also ensure that the consumers are meeting the demands of the consumers who are becoming very tech savvy. They would like to have a lot of services at one go, whether it's an application or collecting points or whatever they want. They feel this is something that is necessary. Now, the bank have an issue with the competition that is available now when it comes to fintech, because most of the discussions we have with fintech is the startups. And some banks feel that let me just join with a startup so we can collaborate at one particular project. And we have an understanding that the banks are too big to fail. They are rich, they are capable, they have resources. So I think from my point of view and my perspective, that the banks should have like an innovation lab so they can actually form their own innovations instead of collaborating all the time with the startups, because it sends a defeating message to the market that the startup is actually more flexible, ready to improvise whenever needed. So I think the banks should really think of a strategy. They should stop, being in denial. Fintech is here to stay. There are a lot of changes happening. Payment gateways, if it's lending and borrowing, if it's P2PL. I mean, the technology allows so many activities to be done lately. And I think that the more that we are in it, we are going to see further innovations. As you just rightly said about the green finance, there would be a point in which we can calculate our carbon emission, and the bank can even suggest for us to plant a tree, which is, by the way, it's already happening. So I think, disruption is there. Banks need to think from a strategic level. They are too big to fail. That is something that we already know from the research. And I feel that the banks can have their own resources for innovation labs, things what the market wants. Financial market is ever changing. We have never thought that we'll come to this point in which we can make very streamlined payments. I do recall that Elon Musk, when he invented the PayPal first, it was for his mother to send the money from South Africa to another country. So he made it easy for her through the PayPal application. And now as we are moving, we see that the needs are changing, retail market is changing. I think that the banks have an opportunity in the corporate banking because most of the startups are focusing on the retail. So I think there is a lot of opportunity and potential, and I will allow the other colleagues as well to chip in. I'm sure that everybody have their 2 cents on this, and inshallah we'll take the discussions forward. So over to you, Brother Mustafa.
Most welcome, Fatin Hanım. Shukran for your contribution and for the innovation labs or centers of the banks are very important as well. Shukran mentioning this. So, Mohammed Rizwan Bey, as now a little go to the East Asia, we would like to hear from a little Malaysia and your region, and then after you, Umar Bey, also we would like to hear about Malaysia. So we will be expert of Malaysia a little, because Umar Bey also effective in Singapore as well as I know. So most welcome. Asia side now active. We are very happy to see you. Most welcome our event, and please, we would like to hear from you.
Thank you, Brother Mustafa. Assalamualaikum. Bismillahirrahmanirrahim. And thanks again for giving us the opportunity to share our thoughts on this very important topic. What Sister Fatin has mentioned just now is very, very important in terms of the pro and cons and the threats as well as the opportunity if you look at it from the bank perspective. As for the fintech side, I think they are more than happy to either becoming a challenger to the existing banks or the incumbent banks, or they can also be part of the collaboration if the banks, the incumbent bank, are willing to collaborate with them. So this brings us to the point of what decide whether the bank or the fintech company, whether they should be collaborating or whether they should be challenging each other. Based on what I've seen in Malaysia, in Singapore, in ASEAN, and Asia Pacific in general, there's two things that really needs to be looked at in terms of how this can be further discussed. One is Sister Fatin mentioned just now about strategizing or re-strategizing when you look at it from the bank perspective. And this bring to the further details in terms of looking at the leadership of the incumbent bank. So most of the banks that I've interacted with, I mean, I'm also sitting as a board member in a bank in Malaysia. Many of the board members or the strategy or the decision makers in any of the incumbent bank are those with very much experience based on the traditional banking setup. So they probably are a bit nervous or probably a bit hesitant to adopt either new innovation or collaborating with the fintech companies, because these are unknown and new things as far as they are concerned. And most of the strategy or decision maker in an established bank in the area that I mentioned just now are people who are not young. So asking not so young people to adopt something new and something challenging and really changing the way the business is being done, that's going to be a very a big task for any of the bank to actually adopt such a significant change. When I read a few books and talk to a few of the banks that has actually embraced those changes, I noticed that you can only do it if, let's say, you are willing to take the leap of faith in terms of changing the business model of the incumbent bank. You really cannot do it by way of collaborating in a small manner. You must actually think and shift your way of how you run a bank in terms of looking at giving the best to your customer rather than thinking first about your profitability or your business margin. That's one thing. The second thing that I also want to bring into the discussion is the suitability of the current infrastructure in allowing the fintech companies to be part of the entire ecosystem. So if you can see that the existing infrastructure of the incumbent banks are made for those businesses that's focusing on capitalistic model and looking at asset liability management when you run it as a bank. But many of the fintech companies are focusing on the well-being and the interest of the customer, which is in certain way the opposite spectrum of the same when you look at it from the financial services perspective. So these again are becoming something like a hindrance. And if you notice, a lot of the fintech innovation are talking about organizational improvement rather than infrastructure improvement. Not many actually are looking into how a system like SWIFT, for example, can be revamped for it to be able to accommodate for fintech companies to be part of the larger network of a financial services provider. I think that would be a very interesting discussion to see how willing are some of the policymakers, especially, to allow fintech company to be part of their policy making consideration, given that a lot of the fintech companies are disintermediating or taking out a lot of middle man role that's normally how a bank actually functions. So I'll leave it there for now. I think there's a lot more that we can discuss going forward. And thank you for allowing me to share my thoughts on this. Thank you, Brother Mustafa.
Most welcome, Mohammed Bey. Shukran for your sharing about what it is hard to make them understand that not awalan or not first margin or profit. Yani they are turning, their world is turning on margin and profits. So, but of course, by the way, there is coming something before Umar Bey. I want to give you voice. Just say, of course, something like AI is coming, how people adopt AI or data usage, or let's say to benefit, to use the benefit of data is very crucial in the following days. So let's see if fintechs maybe more uh, can be more flexible to innovate about data something, because fintech coming from streets, I say streets, end user side. So a little corporates is sometimes far away from streets as managers and professionals mindset. So we will see. Of course, Umar Bey, we would like to continue with you. Then about Asia Pacific, we would like to hear from your perspective about Asia Pacific.
Thank you, Mustafa Bey, and good to be here. Thank you to the organizers, and I'm happy to be among all these esteemed fellow speakers as well, who are also friends. I think to add on to what was mentioned earlier by the Rizwan and Sister Fatin, I think my perspective probably is a little bit more of anecdotal perspective, meaning my direct experience or our direct experience trying to work with banks and actually working with some banks. I think one of the points mentioned earlier is about mindset. I think that's very, to me, that's probably the crux of it. Of course, the details and the strategy and the alignment and so on are very important. But I think that the first and foremost, what strikes me the most is the mindset. And the mindset is not just about mindset, but it also extends into the culture, the way of working, the bureaucracy, the red tape, the limitations due to regulators and so on. It's much wider than just mindset. But the mindset and I would say the way banks are set up and the way most banks, of course not all banks, but from my experience, a lot of the banks that we've spoken to, the way that they work and the mindset sort of reinforces each other to make it more difficult to collaborate. And I do see very promising signs, trying to break out of this cycle or this environment or way of thinking. But I would say in this part of the world is moving not as quickly as it should. And I guess part of it is maybe the main thing that that we've seen in our experience is sometimes for technology companies and startups, especially the challenger ones, the startup ones, the mission and the vision in the long run is what really drives us. What we're trying to accomplish, what we're trying to do. So sometimes when we go to a negotiating table or discussion table, the things that startups are willing to accept or even compromise for the purpose of moving forward, for the purpose of growing, may not seem to be something that, for example, bankers relate to. Right? To them, this doesn't make sense. Are you all trying to take advantage of us? That's why you're so nice to us, or that's why you're agreeing to such terms. I think that's sometimes the impression that I get. The banks are a little bit, or people in the banks are a little bit suspicious. Like, are these people here to take advantage of us? Is that why they're giving such a friendly deal? Or they're not looking to make so much money out of this deal? And so on. And because for startups, a lot of us, we want to have the breakthrough, right? Even if we don't make money, even if we lose money for that particular deal, if it's a deal with a good institution, it can help us to go do a lot of other things, right? So that maybe some kind of distrust or some kind of apprehension. I think it's part of the barriers when you talk about mindset. Yeah. However, I believe that this should be overcome, or this could be overcome quite soon, because we have seen, especially in more mature fintech markets in developed countries. In China now, it's difficult to tell the difference sometimes between what's fintech and what's not. And in Europe, we have a lot of collaboration, a lot of cross investment between banks and fintechs, those in a sense experiments, a lot of it can be adopted or repurposed or localized into the context in developing countries, in the developing world. Right? So I do believe and I do hope that there will be more and more collaboration between banks and fintech startups. And we're already starting to see that. But the rate of the pace of change on both sides, I believe, needs to be much faster. Yeah, and both sides will benefit, of course, assuming the format and the relationship is something that's balanced. Yeah, maybe for now I'll pause there.
Umar Bey, thank you. About startup perspective, you mentioned about mindset and, of course, the culture. There is a phrase that I would like to mention now. Let me allow. Culture eats strategy at the breakfast. Yani whatever you make some strategy, if the culture is not adopted, is not suitable for strategy, you can't. But banks is changing constantly as well as technology as well, implementing now in banks as RPA, as robots, as you know, robot process automation, as regular jobs somehow in officers instead of officers now engines too. Something changing even in banks as technology change them and their mindset as well. So they will be more, and I hope more open for opening innovation labs and closing to the startups and so on. We will continue also second turn with together. Now let me continue with Middle East. Shukran to thank you to the Asian speakers, Mohammed Bey and Omar Bey, Mr. Omar and Mr. Mohammed. And then Hani Bey, we would like to hear from you about banks and opportunities about startups and fintechs, I mean, and banks together, they collaborate or they are risk for each other, or how they collaborate. And Shukran, thank you also. These subjects come from you, and this meeting also come from you as idea. Idea is sometimes 90% of many things. Shukran for this. Hani Bey, most welcome.
Thank you very much. Thank you. Thank you. I do really highly appreciate and respect, all the input that been given by the speakers from Asia and also from the MENA in the same area. I will have really something very interesting. I am really going to share you my field experience in the method of cooperation and between a bank and a fintech company. I am the executive consultant of International Development Bank in Iraq, and at the same time, the executive consultant of the Arab Payment Services, which is, a fintech company. Both are owned by the same group. Both are owned by the same chairman. The philosophy in that, I believe, fintech, it became a fact immediately after 2008 economic crisis. And it was a gap that the high net worth professionals of the banking community, they believe that they were in need for the financial market instruments for that period of time. Okay. We are now in the fourth industrial revolution as a humanity. The experience I do demonstrate, it was as follows. The fintech, it really was, considers as an opportunity for the bank. Even it could be a challenge, but it was really meant as an opportunity for the bank. What we did exactly, we very well defined. The bank has its own clients, it has its own customers, it has its own base. What we did, the bank is a bank with a license from Central Bank of Iraq, and it is in the process and doing very success story as one of the leaders in the private banking sector. The company also, in the meantime, is licensed by Central Bank of Iraq and licensed by both Visa and MasterCard International to issue and manage and operate cards to banks and financial institutions in Iraq. For the last 2 years, we do our best to document what we call the digital transformation strategy for both the bank with its own strategy and the company with its own strategy. Now, what we are doing is the company is doing the management process and operation for the banks as it relates to its international Visa and MasterCard cards, and also manage and operate, maintain its ATM network, in addition to the point of sale network for the merchants' acceptance of the card. The fintech company is supporting banks and financial institutions inside Iraq in the terms of cards, mobile payment e-wallet, bill presentment and payment system, okay, which is what they call, this bill presentment and payment system, real-time online process, in addition to the other financial services related to, card acceptance as merchant network. The challenge we face is definitely the bank, they do have the echo. In general, banks, they do have the echo. And some of them, they look for fintech company as a sort of challenge, okay? But the reality is the fintech company is an opportunity. And we have not to forget any time that opportunity is always more than resources. Opportunity is always more than resources. And other things we have taken into consideration is to be fair of how to really do our pricing and tariff policy to make both parties are happy, to make both parties making profit and doing success story for their client till base. In the meantime, digital transformation is a civilization process. All entities involved, either in the banks or even with the company, must be kept into consideration. Okay, and in the meantime, it is a culture movement from being a cash-oriented society to non-cash or digital-oriented society. That was real experience and tangible experience in this regard, and really both now they are happy. And definitely we do have challenges. Challenges are coming from the regulators in the country. Sometimes you need the regulators to be up to date to the trend of a new technology. I don't want to talk about more details about trend of new technology, where Mustafa Bey raised artificial intelligence or probably cryptocurrency, or probably talk about big data, talk about biometric measurement, etc. Okay, and I leave that for probably if you do have another, issues or sessions to be talking about. Thank you.
Most welcome, Hani Bey. I would like to underline it is very ironic or meaningful phrase that digitalization is civilization. Yani, this is we should underline that this issue because also we can add a little democratization. كده يعني in this beside of them. So so let's continue if Safa Hanım from Al Qudus, Safa Hanım, I think Safa Hanım is now on the phone, so she has some issues. Already she will join again our session. So let's continue Oman and Middle East. Lady Fatin, we would like to hear about in private for Oman, and you are College of Economical and Financial Studies in Oman as a corporate institution and educational center. So what do you think about now, as you know, also banks of Oman and startup side of Oman, and so what is Oman perspective? What do you think about there is startups, fintechs coming according to the regulations, they are allowing them, or some problems you see?
Well, Oman is a very small market, and I guess that we have discussed this previously. I mean, our population is around 4 to 5 million, and we are growing. We have an interest in fintech, of course. In fact, one of the fintech innovations which were rolled out in May of this year was on a spontaneous payment platform for people who have an account with Al Azz Bank here in Oman, in which they can procure furniture. So I feel that the movement is expanding. Of course, Central Bank of Oman, we have our regulatory sandbox in which various fintech startups have been tested. The outlook seems to be very positive for this region. In fact, I'm going to speak about probably GCC then, because the outlook looks very positive, and because we are mostly Muslim population, of course, Islamic fintech is very huge. There is a demand for the products and services of Islamic fintech. In fact, I was quite impressed that there was a development of contribution of waqf that is coming forward. And I believe that social finance is something that is significant in Islamic finance. And already we have seen steps, for its integration in the market. Of course, Saudi Arabia is really having a great, foot into the fintech industry, as, of course, UAE. I believe we are also inviting Brother Farouk. He can shed light on, the happenings in UAE, in which they have a number of fintech, companies, startups, that, focusing on the payment, social finance, and tech as well. All of this, I believe in 5 years' time, we will see more initiatives coming forward. I just wanted to comment on the discussions that we had earlier. And I see that there is consensus in terms of the mindset and the infrastructure, the lack of infrastructure with the banking industry. And I completely agree. I mean, the fact that the banking industry is a bit, sluggish growth when it comes to fintech is the fact of the bureaucracy. And this is probably due to the lack of flexibility and how the startups were able to have a very good, entry to the market because of their flexibility. Their layout is just more less, complexity and so forth. So if I were, someone who would advise a bank, I would tell that it is time for the banks to take a clear stance against, against sitting back and not doing really full integration with the fintech movement. They should really invest on labs. And I really liked what Brother Hani Idris mentioned regarding the digitization as a civilization. So here he is saying basically that there is a new wave coming of young tech-savvy individuals. So it's time for the banks to hire younger talent and give them lucrative packages, because that is something I feel that the banking industry is not doing well. Startups are doing very well in this. They spot the talent and they employ, and it enables the infrastructural development become easier because of their understanding of the markets. As well, I feel again that the bureaucratic process is a hurdle to the banks. They need to break it out, because if they don't do that, I'm afraid that the banking, what I have mentioned earlier regarding too big to fail, it might break out eventually into those big conglomerates are going to break out, because it is important to understand that the more flexible you are in this very fast market, the more that you are offering the product when the consumer need it, there is always an advantage or a step forward that the startups are going to take. Whereas the bank is already thinking what to do, what about the regulatory system, what to do, and it means that they are losing the time in here. Whereas the startup already in the market, already the youngsters are relying on them on that particular platforms, and it's becoming easy. So these are a couple of advices I would give to the bank myself. I think it's time for change. Of course, with change comes resistance, and it's natural that there would be this type of resistance. I also would like to share statistics regarding the banks in financial services. It is 7% of banks have set up their own fintech labs, only 7%. The majority, 63%, have preferred the passive approach of investing in startups or setting up their own fintech accelerators. So fintech labs is a very good advanced way to think about full commitment to the fintech movement. I myself feel it's time for the banks to explore hiring talents that are tech savvy, that are able to deliver, and provide them lucrative packages so they can move in and pitch in the market. Because at the moment, I can, to be honest with you, looking at the banking industry, the most youngest CEO is probably in his 50s, or so the fintech movement is very different. We have young people who are ready to contribute and do the change. They're very easy. So it just tells me something. It sends me a message. So I hope that the banking industry can see that and probably, realize that, yes, mindset change happens when you are actually changing the mindset. Thank you, brother.
Thank you, Fatinanam. Really, the statistics shows something is we are still at the beginning for these issues. So let's continue Asia as well. Let's turn to Asia and Mohammed Rizwan Bey as second. This is second turn as a little with including closing remarks. We are on the close time of the first session. So we would like to hear from you about your suggestions also, because as you're representing, I think you're representing also NGO, also as a board member of a bank, and also you have some neobank technology development, let's say fintech. So you are at the three of them. I think you see some of the problems if there is between them, including central banks regulations. I mean, so most welcome to. We would like to hear from you.
Thank you, Brother Mustafa. Again, I think that's really a good point that you brought up in terms of the stakeholders that you mentioned just now: the regulator, the incumbent, the industry association, as well as the fintech players in the market. I did share, I think, a couple of weeks back in terms of how, from a regulatory perspective, I represent one of the bodies in Malaysia, a government agency called National Productivity Center, where they ask about how we can actually improve the coordination between regulatory bodies, not just the central bank, but there are other governmental and ministerial agencies that actually would be involved in the development, supervision, and also the enforcement of the financial industry. one of the suggestions that we have made, or at least two suggestions that we have made, is in terms of coming up with an overarching framework on creating what we call good regulatory practices, in terms of focusing on what are the intention of when they come out with any rules, any regulation, or any directive to the stakeholders in the financial industry. And we also ask them to consider for the law to allow a self-regulatory empowerment for the industry to actually self-discipline them, among their members before the enforcement or the supervision needs to come to the regulators. So with self-discipline, there will be better actually peer review and peer supervision among the players, and we do not rely too much on the regulators for them to come and intervene with what's going on in the industry. And this, in our opinion, when we suggest to various ministries and governmental agencies in Malaysia through the National Productivity Committee, we believe that there's always a knowledge gap in terms of how the fintech players, the financial service providers, and the regulators, and by having the ability to do self-regulation, that would actually allow the regulators to be a little bit more less intrusive in terms of how the industry actually can further develop. And this is something that, again, an innovation and out-of-the-box kind of thinking. It's not a strange concept in the Western or the European market, where they have self-regulatory organization. But perhaps this is probably something that is a bit strange to the ASEAN or the Eastern countries market, because they are not used to delegating the regulatory powers to the industry for them to self-regulate themselves. So that's one thing that we have proposed for the government to consider seriously. And secondly, we also, again, as I emphasize, like what Sister Fatin mentioned, not only that we want younger people to sit at the management of the financial services, but we want younger people to sit also at the board level, because this is more important in terms of strategizing how actually the entity as well as the industry could grow. Not to say that the older people are not good, but sometimes whatever that they know 20 to 30 years ago are now irrelevant, given the fast-paced development of what's happening in the market at this point of time. And this is also something that, again, needs to be looked at carefully, because sometimes the younger people are a bit more aggressive. Sometimes the akhlaq may not be something that is acceptable to the older people, and that become something like could create some resistance or some pushback in terms of what the younger people are saying to the older generation. They may say the right thing, they may say the innovative thing, but the way they say it, the mannerism and the akhlaq of when they say it, that actually create certain discomfort to the older generation. So I'm quite blessed, because I'm in between. I'm not that young, but I'm not that old, and I can mix between the two, alhamdulillah. And that's why, as you mentioned, Brother Mustafa, I'm sitting in so many function in where I am, and alhamdulillah, I get to learn a lot from many other people, and glad to share with all of you today. Thank you very much.
Most welcome, Mohammed Bey. Shukran, thank you for your sharings. And then let's continue with Umar Bey. Umar Bey, you are also your point, fintech perspective and investing. Can you a little also share about your investing stage, that how fintechs is now can be popular for investing, and because of there's a way of a potential, and I mean, and many people show this, and because of the open banking is coming and booming from United Kingdom, as many people observing. So we would like to hear from you, yani, Umar Bey.
Sure. I will be happy to share a little bit on the perspective of fundraising and investment. Well, I was just wondering from whether Rizwan's point just now. So when you say young, what kind of, am I considered young also? Or?
Everybody here is young. Everybody is here is young.
Just disturbing you. All right. So yeah. So back to the question in terms of fundraising. I think your question was more on the investment landscape or appetite for fintechs. I think one thing I've observed the past few months, something that I'll be sharing quite candidly. Atis was involved in, or potentially involved in a few digital banking initiatives, or we were basically in discussions for digital banking. Whereas all the while we've been focused more on sort of alternative, competing concepts in that sense, right? Like crowdfunding and so on. So I think when it comes to perception, the market generally still sees banks or digital banks as something very big and worthy of investment. Whereas for new concepts like crowdfunding, there is this greater need or curve for education and understanding of what the scope of, or what's the potential of this kind of companies, right? Or this kind of business models. So, for example, in my perspective, a P2P financing license in Indonesia could potentially be more valuable or allow a company to do more activities compared to a digital banking license, right? But when you talk about bank or fintech or startup compared to a bank, then that thinking, I think, is still a little bit behind. That's my view. However, on the other extreme, sometimes there's a lot of hype when you talk about, for example, ICOs, cryptos, and other buzzwords, and so on. It tends to raise some good funds sometimes, although today people are becoming more skeptical. Now, our experience, I think it's not on either extreme. It's more of being true to our mission and vision of what we want to accomplish. And I think on social media, I shared a post that, although we got funded, we don't really see ourselves as a potential future unicorn in that sense. That's not the narrative that we're looking at. We see ourselves as more of a camel. So why camel? Because a camel basically is able to go through different kinds of conditions, tough conditions that no other animal can, not even horses, right? So that's where we see that in this world of fintech, where things are changing so fast and changing so much, companies that can last the distance, it's a matter of time before they hit, in a sense, a jackpot, or they find the sweet spot where they can scale up and create a lot of value. So to me, this ability and determination to continue is something that a lot of investors today start to recognize, rather than fast growth only, without any clear indication of the commitment of the team or the sustainability of the business. Because it has to be either one. Either the company is sustainable, or the team continues to push until it reaches that point. Right? I think today the investment market has changed or evolved a little bit to focus more on the basics of what a business should be. So yeah, maybe that's something that I can share.
Thank you, Umar Bey. Sorry, sometime I am being late because I am in mute and try to mute and unmute to my microphone. So thank you for all your sharings. And then Hani Bey, again, I would like to turn to and thank you again, Hani Bey. You are the idea maker originator of this event. As I said, sometimes idea is 90% of something. So what we do, of course, not 10%, but we want to mention that respect of idea. So anyway, let us this subject as well, and digitalization is a kind of civilization. So let's continue as with your closing remarks as well, anyway, if mumkin.
Thank you very much, my brother. This is a group event. I will really try to, have a few minutes on what I mean by digitalization is a civilization process. This means that, every entity involved in the process must be appreciated and taken into consideration. It's not, one element. There are more than one dimension, one element, one stakeholders altogether. As a banking institution or financial institution, you have to consider first, is the governance, the institution itself, your customer digitalization journey, your employee, your staff, your innovation, the creativity, the new ideas, the future. In the meantime, you have to keep also into consideration technology. Technology is a key element to be kept into consideration and as a tools and enabler. Also your operational module. Okay, so all these entities must be kept into consideration while you are doing your digital transformation process. That's what I mean about that. In the main point, I believe I am a 69 years old. Okay, I was in the past. I started my banking experience in 1976, where it was semi-manual doing banking. I am in the past. I share it. I know it. I also am in the present. I do have part of the future. I don't know when it's going to last. But please, we need to give the opportunity for the new generation. This is a civilization process. This is a cultural human movement. Give the new generation the chance to prove themselves. Believe me, they are designed for this era. They are designed for digitalization. You get my point? It's fair to give them the opportunity. They must have their opportunity. Believe me, when I talk about IDB, International Development Bank, and Arab Payment Services, the bank, we do have people over 70 years old. The majority of the, Arab Payment Services, the Fintech company, they are below 28 years old as an average for the 110 employees. So they are the future to come. Really, they are the future to come. I think this is our responsibility and we have to do it and we should do it. This is, respect for future to come. I think if you do have time more, this is my closing remark. I hope I do send this message. Wish everybody the best. I'm really proud of what was going on in the resources. I need from you, Mustafa, to send us really sort of WhatsApp mobile and email for every one of the participants.
Sure, Hani Bey.
So we have this record in our profile as a contact details. And hope to see you all sometime, somewhere.
Shukran for your speech. Also, yes, for just I want to make joking about you mentioned, yeah, we should encourage young people or allow them to be more decision-making point of, because now they are the user, they are the new bank customer, they are digitally natural digital generation. As joking, I want to mention Mr. Muhammad Rizwan, because we make a joking. He's always getting younger and younger at every event. So in the next among us, he will be the board member of all banks, and then as a young representation. And so so. Shukran, Hani Bey. And let's continue. Let's go to Jerusalem, Kudus, Al Kudus, and then Dr. Safa Hanım there. Dr. Babatunde from Nigeria just joined us. We are waiting several speakers as well. Shukran for your all attendees that so far, that from Oman, from Malaysia and Singapore, and from Jordan, Hani Bey. If you have time, please stay with us. We will continue as second group, and Dr. Safa Hanım, we would like to hear from you, Safa Hanım.
Assalamu alaikum. Good afternoon, everyone, or good morning, good evening, because we have different time frames here. So
Soon.
I wish you good time, everyone. Sorry, I had problems with the internet, and I kept going out and in, so I wasn't able to hear from you, your intervention. So sorry, maybe I will be repeating some of the ideas that you spoke about, but I'm sure that what you said is so valuable. I will have to hear it again and listen to your interventions again, so that we can build on the share of the experience that Mustafa Bey always insists on, that you are kind people, knowledgeable, and you are sharing all the knowledge and the new digital experience. So if we speak about the banks and the startups, this is the question, Mustafa Bey, yes, about the opportunities, startups and banks and fintech. I think that both the financial institutions, the traditional ones, and the fintech startups, they both face regulatory challenges in terms of the capital requirements, anti-money laundering, in the privacy and the security, and also the type of financial services that they provide. But I'm sure that fintech had a variety of opportunities to offer in integrity technology into the banking business, and they greatly improve the bank's operational performance and the competitiveness and the sustainability, and innovate also new products and services. So there are different fintech applications that can be used in the banks, like I heard you speaking about artificial intelligence, which is one of the most popular fintech applications in financial services industry, that includes chatbots, for example. It includes virtual assistants in enhancing customer banking experience. It includes machine learning in anti-money laundering software. It includes also fraud detection and compliance. So AI is expected to reduce the production cost and increase the revenue of a greater extent in the banks. So banks should look for intelligent people, or for developers that knows about these artificial intelligence techniques to help them in their work. Also, the blockchain itself, the technology enables faster and accurate payment processing, including cross-border payments, corporate payments, or intra-bank transfers with minimal errors. So the blockchain enhances the data security and decreases the cost, increases the efficiency of the transactions and the marginal profits. There is also the cloud computing, which is also a solution as a platform that facilitates banks in storing, managing, accessing data with high-level data security. And cloud systems reduce the infrastructure, the costs, and help the bank to build resilient operations. So fintech may represent a threat to the competitiveness of a conventional bank, but fintech provides various benefits to customers in terms of accessibility cost, decision-making, and choice. And at the same time, there are challenges in the adoption of fintech as security and data protection. But at the same time, the other threat for the banks is that a huge unbanked population can benefit from fintech, from the enormous potential for thriving fintech potential. And the market would face some hindrance from the regulatory framework of the infrastructure and the financial literacy. that we as a Foster community are working on doing many lectures or many meetings to speak more about the financial literacy. So this is my talk now for now, and I hope we can participate further.
Most welcome, Safa Hanım. Thank you for your contribution. We will continue also a little bit your area as part of MENA as well. And then let's continue Nigeria. So far we make Asia experiences. We heard about Asia experiences and observations from Umar Bey and Rizwan Bey. Dr. Babatunde, welcome. And we would like to hear about your regulations of Nigeria, your fintech market and allowance. As far as we know, some Bitcoin operations, the National Bank of or Central Bank of Nigeria, one of the first banks that not allow Bitcoin operations, as far as I remember, and so on about banks, how they cooperate with fintechs or not. As a fintech NGO, you are exclusive of one fintech NGO in Nigeria. We would like to hear about Nigeria and you.
Yeah, thanks, Mustafa, for having me. So basically, okay, let me start with the Fintech Association of Nigeria. We're just a platform, an ecosystem platform that helps to connect everybody within the tech space in Nigeria. So we have over 20 sectors represented, from incubating banks to payment fintechs, digital lending, wealth tech, agri-tech, health tech, insurtech, law firms, media houses, anyone within the value chain that adds value, that creates enablement for tech to for technology to happen, is welcome into the association. So basically, the Nigerian fintechs ecosystem has been quite vibrant. In the last 7 years, over $2 billion have come into the space in terms of investments into various fintechs. In terms of regulation, I think that a lot of progress has been made. I mean, there's no doubt that with regulators, you'll have challenges. Technology is always ahead of regulation. So when regulators at times don't understand an area, at times the approach they use is to use the AMA approach. And then when they eventually understand, they release their pressure. So basically what is happening is that the central bank says that when you asked about the Bitcoin, the central bank says, look, we don't want crypto exchanges to use the Nigerian banking system for their operations, but not a ban on Bitcoin. If you can do your transaction in any way, you can do it. And what that had done is to create a P2P market in Nigeria for the Bitcoin, for the cryptocurrency business, making Nigeria one of the largest markets in terms of trading within cryptocurrencies. And what we've tried to let the regulators understand is the fact that, I mean, the young people want something, an international store of value that can make them hedge against the volatility of the Naira. And probably that's why you see a lot of young people playing in the Bitcoin market. So I hope that, I mean, that it's something that we've written a position paper to them, which they're reviewing. And we hope that it's something that with the e-Naira being launched in October, they're likely to maybe revisit the issue of the cryptocurrencies. And apart from that, we try to develop a working relationship with the regulators. So we have what you call a regulator forum, where the regulators and operators come together and be able to share ideas. And so we have all the regulatory agencies in Nigeria, from the central bank to the Securities and Exchange Commission, the insurance regulator, the deposit insurance regulator, the financial crime regulator, all coming to sit on the table, and we can discuss issues that affect the ecosystem. Regulation has moved. The SEC has what you call a fintech roadmap for the capital market. And right now there's a committee which we are members of, that's looking at a fintech roadmap for Nigeria. There's also a startup bill for the country that's been initiated at the presidency, for which we've also had our input in it. So there's a lot going on, and the environment can only be better to encourage more investments within the fintech ecosystem in Nigeria. Thank you.
Most welcome. It is nice to hear about Nigeria, and as far as next turn, we would like to hear about Africa and more detail about banks' relation with you as NGO, and how you're observing banks. Some statistics we mentioned before as first session. I mean that very still banks very how can I say at the beginning of the closing to the open banking or closing to the cooperation for startups or fintechs. We would like to hear about you next time. Let's continue with Mohammed Khatib Bey. Mohammed Khatib Bey is chairman of Path Solutions and effective in MENA region, and also after that, also as far as I know, Asia will be more effective as Path Solution, because of some news we heard about Path Solution. We congratulate about this news, and we would like to hear more about this news, and we would like to hear, as banks, they are very related to with banks as providing of Islamic core banking solution to the banks. So we would like to hear their observation. Mohammed Bey, welcome, and we would like to hear.
Thank you, Brother Mustafa, for the opportunity and for allowing me the time to speak. Yes, just to comment on the deal that you mentioned, thank you for the congratulations. We at Path Solutions realize that the world is going...
Greetings, Brother Muhammad Khatib. Hani Idris Ma'ak.
Greeting, Brother Hani. I actually caught your speech earlier. It's a very good one. Looking at what's happening in the world and understanding that technology is becoming a key pillar in the financial industry, and we're feeling that the importance of technology, as you notice in the last 10 years, moved from a supportive department in the banking sector to the boardroom. So now they're demanding even the board directors to be technology savvy, and the CEO has to be technology savvy, and the technology people, the CTO. A lot of banks now are introducing the CTO position in the bank, and the CIO became extremely important in the executive management and strategic in the decision making. So knowing how important that technology is, we decided that the opportunities are amazing. And based on that, we wanted to take Path Solutions to the next level. And so we accepted an offer from Apex, a private equity that manages around $60 billion in the US. And they're creating a giant company for the financial industry by purchasing different leaders in the different segments and putting this company we call Azentio. We put it together, headquartered in Singapore. Where this Azentio has a leader. We bought a leader provider of software in the insurance company, in the insurance business. They bought us because our leadership in the Islamic finance business. They bought from 3 Infotech, which is a huge Indian system integrator. They bought their software division, and they're very strong in lending and anti-money laundering, etc. So we're very excited, and I think Azentio will continue to acquire more companies because they understand the future is in technology, and they want to have a player who plays very well in that space. So that's the exciting news. Of course, we accepted their offer and we signed the acquisition, and we're working on the completion process based on approvals from regulators, etc. So we're expecting, hopefully, in the next 12 to 6 weeks, we will actually conclude and complete this transaction and move on to focusing on the great industry of ours. Of course, this is a great news for our customers. This is great news for our people. Great news for our customers because it provides them much stronger technology and software partner that will allow them will give them access to more R&D, more technology, more resources. So we'll be even a much stronger technology and software partner. It's great for our people because it provides them much larger company, bigger opportunity for growth, and more countries of coverage as an international player. And it's great for all the stakeholders in the company, for our partners, etc. So we're very excited about this opportunity, and I think it's gonna be great for everybody, inshallah. Regarding the subject that we're talking about, I think the team, I actually caught the first hour, and I was a listener on YouTube, so I caught the sessions, and I think that there was a lot of good discussions from the team and coverage of the subject. I think my view on the fintech revolution and what's happening with everything that's happening since the last 15 years until now is finally the dust is settling, and I said it for years. There is an ecosystem that has to be formed. A brand new ecosystem has to be formed, and this ecosystem that covers the financial industry worldwide and regionally and in the country. And there will be an ecosystem for the financial industry. There will be an ecosystem for a subsystem for the Islamic financial industry, etc. And basically, different organizations have to find their places to play and their strength based on their strengths in that ecosystem. Nobody's going to remove anybody. Like I remember a few years back, 2 or 3 years back, everybody was telling me, "Oh, you think that's the end of the banking business, whatever." And my answer was consistent. Nobody's going to take the banks out of the game. What will happen is the banks will focus on their strengths and competencies in the ecosystem, and fintechs will be playing a role in providing these services in better technology, in better user experience, etc. Actually, if you look right now, most of the fintechs are providing channels for financial services for the banks. I'll give you an example. This summer, I was in the US, and my son banks with Bank of America, and when he goes to transfer money, they actually offer him the services through Zelle. Zelle is one of the fintechs, big fintechs in the US. Bank of America is the largest bank in the US. And they're not, saying, no, you cannot, I don't want this fintech, I want to do my own payment system and whatever. Actually, they encourage you or encourage the user to use Zelle, and it's on their website in the internet banking, and it's on the mobile. Anytime you press transfer, instead of sending you to their transfer, they send you to Zelle. So, and this is really how we're always in this region, slow to adjust, but this is what's going to happen. What's going to happen is everybody is going to know his place. Every organization is going to play the place right in the right place. And I do see that in happening in our region in a delayed manner. Because our region, we have to admit that our region is heavily regulated, much more regulated than the West, and the space for innovation is not as wide as it is in the Western countries. So it's when the regulators realize this is happening in the West and we have to play to catch up, then the regulator is going to force the banks and the fintechs to play. We do have good initiatives in some countries, and actually sometimes we're overdoing it in some countries but I do believe that it will work out. We have a couple of really good neobanks came up in the last year in UAE. There's a couple, there's one in Saudi, and they will continue to come. In the fintechs, there's a lot of good fintechs, but if you look at the fintechs, they're usually supported by the system in the country. We haven't had really great success in the fintechs in the region where a fintech goes beyond the borders. Like we don't have a great fintech for the Middle East. We have a great fintech in Egypt, when you talk about Fawry. We have a great fintech in Jordan, when you talk about Fawatircom, which is basically you pay all your bills and everything. And that's because the central bank blessed that organization. And it's actually anti-competitive if you think about it. In the West, they will consider it anti-competitive, where basically the central bank would come and say, okay, I bless this payment system, and that's the one everybody should be using. And I know Brother Hani is listening to this, and he may have his own opinion on that, but I really do believe it's anti-competitive because we need to create dynamics in the market where any fintech and any payment provider can actually compete. And by doing that, you have to create the right atmosphere and the right accessibility. And that comes when we start talking about open APIs, when we're talking about open banking, and how we just provide these interfaces openly, and then we let people or companies or fintechs compete based on their competency and their ability to provide a great customer service. In our region, you have to go through a very, very painful central bank licensing, and it's up to the central bank to license you or not. And after you go through that tremendous process, it's usually, are you really blessed by the regulators and the people who are making it happen in the country? Or so small fintechs have really hard time playing and succeeding. I don't want to take too much time, but this is basically a very quick summary on my view on the subject, and I'll if I get another chance, I will definitely expand on the subject. Thank you, everybody.
Most welcome. Thank you, Mohammed Bey. Also, when you mentioned neobank, one neobank from one of the maybe leader neobank from Asia Pacific, Tonic Group CTO, Ramu Bey joined. Ramu Bey, welcome, Mr. Ramu. Most welcome. We would like to hear. So far, we mentioned about fintechs and banks. You are between them, yeah, in the middle of banks and in the middle of fintechs, in the middle of regulation bodies. How is difficult? And I would like to also for fintech. So far, we didn't mention as sectors and industries. Which do you think banks or fintechs can focus on some specific of groups or industries or verticals? Will be more successful for them, or only end user already, or for common end user neobanks or digital banks must be provided by banks as digital banks as well? We would like to hear from Ramu, Mr. Ramu.
Good morning, all. Thank you, Mustafa, for the nice, you put the strong question. Probably, I'll try to share my experience and the point of view to all the fellow leaders. Let me put it this way: fintech, it's not new. Most of us knows. But the thing is the business model, what we want to, and the opportunity, what is available. I looked at it in a two way. One is I'm looking at a developing market versus developed market. So when we look at either Middle East or South African countries or even Southeast Asia. So when we looked at it as a whole, outside Europe and North America, in 20, I can put as 1980s, especially those two big spaces, the middle class income got increased a lot. That triggered a new economy. That's where the banking forced to give a more digital ecosystem. If you look at this in now both, it can be Middle East or South African and Southeast Asia. When we did analysis, actually, all the three regions, which country very attractive, which continent we can go, when we Tonic started. So it looks very clearly, the unbanked or underbanked population, you can either put as a financial inclusion from a developing country perspective or a developed country perspective, emerging affluent, mass affluent. This is a new big category of people, which is literally speaking the new income group, which is very attractive, and you can build things from the traditional banking. Most of you guys are expert in that. The high CAC, how you can break that high CAC into lower CAC model, and how to serve them and make money out of it. So one big thing where we looked at it is bringing, with the current advancement of technology, automate them, everything through cloud technology possible. So reducing the human power, go to the agility, that bring you a lower capex and optimized opex, which give you the low CAC, customer acquisition cost. That one give you a big pack to pass the benefit to the customers. Now, what is the key problem I can address with Mustafa asked for it? One is the hyper personalized product offering. Instead of looking at every big bank saying I'm doing digitalization, we looked at it. What is the problem, key problem we can solve in the pilot market or targeted market? Taking the local problem and in a design thinking approach, trying to solve it, especially, for example, we said the customized or localized product offering, a communal saving, which is there in most of our developing country, personalized saving, it's there in the most of the countries. We try to create, customer, you create your personalized saving product. I will not sell you your kids saving, kids education, your home saving plan. You create your personalized goal and put the money. Then you want to create a networking effect by pulling a communal saving, which means you want to work with your friends to save money, or you want to work with your family to save more money. I can give you a networking effect and create a more interest based on the amount and based on the number of people you are bringing in, which is there. It is traditionally last 20, 30 years, this is there. We are trying to bring it to the regulated system. And where we are next big focus, the real market lies, Mustafa and team, the non-resident offering. How are we going to target today non-resident? People are move around different world and making their lot of money. The one big thing they're doing is pushing the money back through remittance, and they don't know what they're doing with the money. Back in the home, people might be spending. And when he come back after 20 years of hard work, probably he might see a small retail shop or a small house. Nothing else he will find it. So how to control the non-resident life cycle problem? Once the guy finished his school or college or getting into outside the country, start making money, the complete life cycle can be built in to move the money, save the money, and helping to build the house, helping to buy the life insurance, protecting his parents, paying their bills on behalf of their parents, looking at the hyper personalized non-resident focus. And next big thing is going to be where the fintechs are focusing, cross-border, because it's like 20 trillion market, which throughout the global cross-border remittance, both retail and SME, which the fintech with the ecosystem partnership, we can capture, at least even if you can capture less than 1%, which is a huge money for the fintechs. And the third is, Muhammad is rightly talked about a couple of things about open banking, those kind of area. That's a bigger focus for ecosystem partnership. Payroll companies, digital lending companies, even example, today gaming companies, they want credit selling. Why don't you onboard them and buy the gaming credit through other platform? So that's one of the ecosystem partner can be onboarded. You can look at it, the edutech, insurtech, and even agri-tech. Even tomorrow it will be a sustainable tech. Everybody need a financial service. Even if you want to sell a solar panel, I can fund it to buy a solar, and I can fund it for even pay your solar energy, how much consuming, what to pay, everything I can lend it. So end of the lending is going to make money for the bank, not by saving account or current account. So building this ecosystem, tap into that, their open banking. This is another big business opportunity available, to the fintech group like us. The last thing we need to take the banking out of bank. That means you need to start thinking everything from customer centric. Whether can we empower the customer and link the whole product and experience to the life cycle of their lifeline. Starting if it is a kid, if it is a middle-aged guy, is a old man, a different guy need a different based on their income. The need is different. Whether if we can able to connect these dots and provide the complete personal, hyper personalized offering to each demographic, each segment, that is where we are working hard now, Mustafa. That's a part. So the success I want to last before closing it, the success we start putting this idea into the place. We launched a bank in the Philippines now as a pilot market. That's not the only market, that's a pilot market. I can see less than 6 months, more close to 100 million US dollar funding, I mean the deposits, customer money, and grown from nothing to close to $500 million valuation of a bank, with just one country. I'm Series B, I'm closing it in February 2022, which is $500 million valuation. So which means huge market potential out there for fintech. You just need to find out the right model and with the right technology, with the right, with the right regulator blessing. At the end of the day, this all can happen only if the regulator allows to do things. Just over to you, Mustafa. Any question?
Thank you, Ramo. As far as I remember, you are Singapore-based, but effective in Pacific, East Pacific. Like now, you are on the licensing completed in Philippines or Kida, as far as I remember. And I always receive many news from Tonic Group, so it must be as CTO. But you surprised me as CTO. As you talk about chief business officer. Yani,
Oh, thank God.
yeah, I surprised. But of course, CTO as very, very close to the customer as UX, UI, and then collect data, cyber security. But I think next step, you are CEO of Sony. So most welcome. Most welcome. Let's continue. Thank you sharing your details about your approach as Tonic to the business of this. This is not only technology. Yeah, yes, technology must be, but also business side should be also good settled. So let's continue, Dr. Safanam. We would like to hear the market in your locally and how developing as regulation pushing or stopping, or in general, what you see fintechs coming, but some problems. They are experiencing some bureaucratic problems or funding problems or this kind of stuff. If you like mention, most welcome. We would like to hear from you.
Yeah, so first of all, I would like to congratulate our brother Muhammad for the acquisition that took place, because we are directly affected by that in Palestine, since many of his solutions are implemented in the banks in Palestine. I'm on the board of one of the banks. We work close with Mr. Muhammad and his company. So congratulations. We spoke about this in our board meeting also. So congratulations, Mr. Muhammad, for this acquisition. So we start from here. So his company is providing fintech solutions to the banks, and it is working in Palestine. So we have regulatory problems. And in order to speak about the regulatory problems, we did a workshop in Palestine Palestine last week. I told you about it in other meetings. It was especially a workshop for the regulatory issues. We invited the Palestinian Monetary Authority. We invited the Palestinian Capital Market Association. We invited the incubators, the people who work with startups, and also the Ministry of Telecommunication, Ministry of Economy. All were around the table because there is a project in Palestine to provide more services to the municipalities where there are e-payments and there are more services to the public in the government and in the municipalities. So we were trying to see what are the challenges that they face, all these people face, and what are the needs from, for example, the regulator, which is mostly the Palestinian Monetary Authority, regarding the digital transformation, digital transactions, the e-payments, the e-signature, the digital ID, and all these challenges around it. So when we did the workshop, we saw that there are many advances in Palestine in this field, and there are many projects going on, different projects from different stakeholders, as we said, and we said that what is the most important thing as for these fintech companies is that they work together also, because some of the municipalities, for example, had already services running, fintech services or financial services running, but others thought it was a challenge. But so when they exchanged these experience with together, they found out that there are lots of things that can be what we can say that can be overcome, and they can work on it so that they can work and accept the financial services more and provide people with services. So I know that most of the banks are working on developing their systems, and they're introducing new services using fintech and all that, but we have still some problems in Palestine about the digital coins, for example, that they are not allowed to use digital coins and so on. So they are for the blockchain, they can use the blockchain as a technology, but not using the bitcoins and so on. They still are under consideration and under what they call revision to be able to regulate them and allow them to be in the market. But I am on the side of the incubators and the startups and so on. We tell them, don't wait for the regulation. Try to invent, try to use the technology to overcome some regulatory constraints, because from the experience, from the worldwide experience, there are many things that the technology can overcome, and not wait for the regulators to, because regulators usually take long time to adopt a law or to have new procedures. Like for example, the Ministry of Telecommunication is now working on revising the law, the transaction law, and this will take a long time. So startups and the new technologies cannot wait till the regulatory body finishes from all their work. So they have to start, they have to try to see how they can go by, or they bypass these constraints or these regulations in Palestine.
Most welcome, Safa Hanım. It is nice to hear from Palestine from you. Thank you for your sharings. So let's continue Nigeria. Dr. Babatunde, welcome again. We would like to hear you a little more detail from Nigeria market and your perspective. Again, you mentioned if banks is still banks are agile to approach to their customers, or they need another tonic in fintech. I mean, in neobank and in Nigeria, as far as I know, some neobanks also in Nigeria started to. If I am not sure if central bank licensing is allowed. So we would like to hear more about Nigeria market and Africa market. If you can also talk about, welcome. We would like to hear from you.
Okay, so let me start with the relationship between banks and fintechs. For us, we always emphasize collaboration between the banks and the fintechs, and that the way the regulator has set up the system, there's no way that collaboration will not exist. So like banks don't have switches. So fintechs have switches. You also have the regulator having its own switch. So whatever transactions you're doing, either by transfer, either by cards, either by POS or an ATM, goes through a switch. So it can either be the regulator switch or the fintechs switches. So you have that. So you have that collaboration that exists. You also have banks that ride on some softwares that or apps solutions that fintechs have developed. We have banks having incubator labs and allowing fintechs to come in there to work like almost like a sandbox, work with them on their solutions. So there's a lot of collaboration going on between the banks and the fintechs. In terms of the market is big. I mean, we have 200 million people, out of which only 49 million are financially inclusive, out of about 100 million, which we expect should be financially inclusive. So there's still a huge market for financial inclusion. A lot of it is, there's a lot of limitation in terms of infrastructures in the rural areas, literacy issues. But then that has been solved by the banks working with telcos to provide USSD facilities, such that when you don't have a smartphone, you can still do banking transaction using the USSD codes. So that helps the market. I think that you see similar. What you see in Nigeria is almost similar to what you see across Africa. I mean, well, you have some little changes, like in Kenya, the fintech is telco, almost telco led, as against what you have in Nigeria, where it's a bank led model in Nigeria, as against a telco led you have in a place like Kenya. So but what's really critical is the fact that all across Africa, we're beginning to see a lot of innovation, a lot of fintech springing up, and the adoption. People want to buy convenience. I mean, in 20 years ago, to cash a check, you probably have to have a strategy for your day, in Nigeria. But today you can sit in your room and do all your transactions on your phone. So that's a whole what's called change that has occurred, and everybody wants convenience. They want better services, and you see that happening across board. Even now, you're beginning to see that in the agricultural sector. So the central bank has an intervention program for the agricultural sector for rural farmers that are aggregated. And all these rural farmers have to be financially inclusive to benefit from those credits. So you're beginning to see them also beginning to get those convenience where they can, from their even smart or from their analog phones, can still do transactions. They can receive payments for inputs, and they can make payments using those phones. So you're going to see a lot of that. I would believe that as more farmers get into these programs, and those not on that program see those benefits, financial inclusion will increase. And I think the same thing we're likely to see all across Africa.
Thank you for your sharings. It seems a little telco operators by USSD codes because of smartphone penetration still maybe in not very high level in Africa. And so USSD costs can be effective by transferring financial issues under the telecom operators. Yani they are controlling or sharing from banks some banking styles, yani banking behaviors. Yani.
Whether they're just providing services for which the users pay for. So there's that collaboration, you know, that exists. I mean, like I told, like Kenya is telco-led, Nigeria is bank-led, and that's because in Nigeria, the telcos cannot have not been licensed except you register as a financial provider, as a subsidiary to provide financial services, which is unlike what you see in a place like Kenya. So there has to be that collaboration between the banks and the telcos for that USSD to be able to, for them to be able to provide the USSD service to people who don't carry smartphones.
Let me ask, if you say 100 million people and half of the Nigeria is unbanked now, or I misunderstand?
Yes, so you have are not in the banking, are not in the formal banking. So Nigeria has what you call the bank verification number. So for you to have a financial service, you must have a bank verification number. As of today, there are only 49 people registered on that platform. So those are the people that are in the financial sector. That does not mean that there are others who are not benefiting from those financial sectors. So even now that the central bank is introducing the e-Naira, which is a digital currency, they're saying that if you don't have the bank verification number, but you have the national ID card, you can also participate. So gradually, the national ID card is also beginning to become relevant. I mean, it's been a long process. So we see that also combined with the bank verification number, that will increase the number of people that are financially increased. So, I mean, when you say, you probably expect about 90 to 100 million people should be financially inclusive from the population who belong to the age that should be. So, I mean, if 49 million are only on that platform, that means that the rest, however, I don't subscribe to the notion of people are unbanked. Within local communities, they have their local banking system. They probably have somebody who goes around, collects money, and everybody borrows from him. They save through him. So they have the local banking system. They might not be in the formal banking structure, but they have a banking system, a financial system that works in those communities. Is how do we get those particular individuals integrated into the financial sector? Because banking is also about trust. In those communities, they trust those individuals. They don't trust the banks. But if those individuals can bring them to the banks, it will be easier. So the approach to financial inclusion needs to include those people in the local communities that the communities trust, who have provided some financial systems in those communities.
Thank you for this explanation, and hope this also all yeah, this is unbanked people will be more, I think, in Africa according to the other continents. So as NGO and banks and financial and governments will recover this as much as possible soon. Yani. So thank you, Babatunde, your approach and your joining and contribution. So let's continue, Mohammed Khatib Bey again. Mohammed Bey, what do you think about that? Banks must spend much energy or much power for their open banking APIs or investing in startups, fintechs. I mean, or they should focus on some vertical markets, small, medium business, retail, or kida. As far as I know, you have some partnership with an Omani private bank and one fintech. Can you mention about this example as well? Because it is a kind of collaboration, I think, between a fintech and private bank as credit, instant credit at the retail shops. We would like to hear from your experiences and considerations.
Thank you, Brother Mustafa. Let me just make a couple of comments on what I heard about Nigeria from Brother Babatundu. Actually, what's happening in Nigeria is amazing stuff, because in the last 10 years, access to payments grew from around 20% of the population to around 70% of the population. And it's one of the biggest stories. We have customers at two banks in Nigeria, and we follow Nigeria very closely. It's one of the biggest success stories. So in Africa, as was mentioned, Nigeria and Kenya are probably doing some noise on the fintech area. Regarding the telecommunication, a lot of people don't know that actually the fintech revolution started in the telco, not in the banks. And the way that it started is those top-up, what they used to call them top-up accounts, where you pay for credits on and you keep credit on your SIM card. People start keeping more and more credit, and telecommunication companies found a way to use these credits to actually buy things with these credits. And that's where Kenya excelled in the payments, and I think it's called M-Pesa, the service that was just took the world by storm. And I would say it's the first most successful payment system or a fintech is the M-Pesa from Kenya, which is actually done by a telco, not a bank. What they realized, the central banks, just some history for you, where countries like Sudan discovered that outside of the banking system, there was around $5 billion sitting in these telco accounts for the people. So, and of course, the central bank feels very uncomfortable when all this money is actually not under their control and it's not being regulated. And this is why the central banks were pushing very hard the banks to move into this space and start offering fintechs and payment services to actually compete with those telcos. And that's where the whole fintech revolution started, and the technology companies came in, and the startups and all that. Anyway, so that's just a little bit of history on that. I do believe the banks continue to play a very key role in the ecosystem, and I do believe, yes, they do have some challenges around culture, although less in our region, because our banks are smaller and medium size, so the culture is not like what it is in the West. So when you hear a lot of people talking about culture shift and culture problem, it's really those giants like Bank of America and like JP Morgan and Citibank, where you have hundreds of thousands of employees, and the culture to do business inside the bank is very cumbersome. So our banks in the region are much smaller and nimble, and they can actually move. So you can find them, they're putting a technology team very quickly, and they're moving. And we've seen some success stories like Bank Bobian in Kuwait and a couple of banks in UAE, etc. The competencies, the skills and the competencies is still a big issue in the region, and finding the skills for those technologies, either in digital banking inside a bank or in the fintech startups. So having the access to these skills and having the competent people and competent resources, it continues actually to be a challenge. And we, as a technology player in the region and actually worldwide, we recognize this problem. And by the way, it's a worldwide problem. Even in the US, they're having really hard time to have access to technical resources. And that's why you see a huge push to immigration laws, and you find Microsoft and Amazon and Google pushing the government of the US very hard to open up the immigration for these immigration laws to open up, so they can bring more engineers and more technical people into the country. either way, yeah, there's a lot of challenges in the industry. There are a lot of challenges for the banking sector. There's a lot of challenges for the startups. It's all about how you collaborate, how you create the ecosystem, how you work. And I believe the most important thing is to create an environment that allow you to collaborate, but also to compete without favorism and anti-competitive practices. I do believe in some countries they're succeeding with this sandbox, like you find a lot of regulators creating sandboxes where a small fintech can plug into the sandbox and actually have access to very quickly to test their solutions. Other countries are looking the other way on the sandbox and they don't have really any of that. I think the banks in our region will continue to push on innovation and try to catch up. We see most of the banks have digital, in addition to digital transformation internally, because that's needed, by the way. You need to do digital transformation inside the bank, end to end, all the way deep into the core, so you can actually provide the customer experience and digitalize. It's not very smart to have a very digital experience for the customer, but in the back end, the bank is doing it manually with paper inside the bank, running around trying to get signatures and stuff. So you have to do that digital transformation inside the bank and then in the edge and providing the customer with a customer experience. And most of the banks, priority number one right now is actually digital transformation and digital channels and all that. It's still, they have a lot of challenges to actually be able to compete with a neobank because of the business model that Brother Ramoud talked about. It's just, very hard to compete with when you look at the neobank business model. The issue here that helps the banks, the incumbent banks, is the trust issue. A lot of people have a lot more trust into the banks, and if you have your savings, your life savings, you don't find many people moving that life savings to one of those fintechs, so they're trying it out with payments, they're trying it out with different services, but still, if you look at the main savings, it's usually in one of those conventional banks or one of those incumbent large banks. So if you have that trust asset as a business asset sitting with the large bank, you have the amazing customer experience and services with the fintech. It will be an amazing marriage if you can get them to collaborate and offer amazing services to their customers. So that's what I think the bank needs to do, is to collaborate. I think in our region, it's harder to collaborate. They're pushing more and more to compete than collaborate. That's why they have so many initiatives around digital channels. But we do collaborate. We created a fintech, as you said, Brother Mustafa, in Oman, where we front the banks, different banks, and we provide the services through the retailers. And we're not really competing. We're just offering an arm, a customer experience and an arm easy in the retailer, so that basically you don't have to go for a loan to buy a TV, a large screen TV. You don't have to go to the bank and apply and do this and that. You can actually do the whole thing at the point of sale. So, and you do it with an Islamic finance instrument. So this is, I think, what the world is going to look more and more like, where basically you have all this amazing ecosystem emerge in our lives, and we do the services, and we really don't care who's doing what. As long as the service, the financial service as a consumer, it's get done. I don't have to say, oh, I'm doing it through this bank and through this fintech or whatever. I think it's going to be integrated in your life, and it just happened. And in the ecosystem, maybe 3 or 4 players getting this transaction to happen, but you really, as a consumer, you really don't know that. It just happens seamlessly. And I think that's the world we're moving into. It will take some time to create this frictionless world, but I think it's definitely going to happen. That's what I have on that point.
Most welcome, Mohammed Bey. Also today, I catch every speaker. I catch something from you now. I catch fintech revolution started at telcos, not banks side. This is. I want to pass with these sentences to the speak to the Ramu Bey, Mr. Ramu, but adding something like this. But Ramu will not be happy for this adding. I am sorry, Ramu. Mesela when Mohammed Bey say telco started, I remember telcos a kind of tech fins. Yani tech fin started at telco side. Now I want to make Alibaba make press on you in Philippines if they can make some services at least payment. Yeah. So what do you think about this also tech fins or competition cooperation? Tonic now I think gained, as you mentioned, interesting points yani as customer base or these rakams numbers. So we would like to hear from you more detail as conclusion remarks as well.
Thank you, Mr. Thank you. I think Muhammad Bhai has a lot of deep understanding. I can see that reflecting by myself. I'm not a banker. I was a tech guy. Tech guy worked in a telco. So he's true. In the back, lot of innovation start from telco breaking the bureaucratic telco business model. As you most of you knows, telco is very rigid regulatory body, and the business model is very tightly coupled. So the innovations on customer experience, initially we have start pushing it with the two-speed consulting approach. We started with telco. Even before Tonic, I worked in one of the Malaysian giant called Axiata Group. Under that, Celcom was my digital transformation program. I was their digital program head. Coming back to this fintech, as you rightly said, now most of the e-commerce companies and financial tech companies are investing on the fintech. One of the things rightly said, in Philippines, Tencent has put a huge money into the wallet providers. Nothing but, for example, Globe. Globe is the telco company spin off the wallet business, because easiest way to bypass the regulator and getting the payment market and capturing the floating money through the wallet business. Even though wallet doesn't make money, but you can capture the whole market, connecting merchant and consumer. Still you make money, not through the customer, but through the customer purchases through the card schemes. That is where it was still attractive business. So where if you look at either you're talking about Globe or Paymaya, got big funded by the telco companies or for this innovation. Coming back, why this are so popular? There are a couple of technology advancement. Number one, today, the telco reachability is so high because of 4G and 5G network and where the penetrations. And now the huge pressure in telcos to go to all the unreachable places which they couldn't do it last 5 years back. They can able to do in all the islands of either Malaysia or Philippines or Indonesia. Now the telco connectivities or internet connectivities the backbones are growing. This one supports the complete fintech world and the tech guys too easy to innovate, which can be omni-channel, it can be mobile first approach. All I need is my customer carrying a mobile phone with the telco connectivity or internet connectivity. All that I need to service him, either through a direct relationship or agent-based relationship or assisted model relationship. I can bring them, I can serve them. I can acquire, I can service, I can retain them. This is one more. Second, when you look at the advancement of cloud, Today, I don't need to put multi-million dollar for a huge capex to innovate. All I can do, one click, open up a cloud, start putting our brain, start slowly building this as a small building blocks of microservices, starts solving your eKYC problem, start solving onboarding problem, start solving payment problem. Take the small chunk as a building blocks, build it as a microservices, expose as a digital service to the consumer through a digital channel. This is the big technology change. So I can start with a zero customer, go to 100, go to 1,000, go to million. It's all consumptions based infra utilization. And I don't need an upfront huge investment. Even most of the cloud provider now, if you say you are a fintech, there is a fintech onboarding program with a zero cost, they will fund it and you can run the whole program with a zero cost of cloud. All you need is your manpower to do a DevOps model, the guy who understands the cloud, how to set it up, your whole solution, how to build it up, and including your business continuity plan. Of course, the majority are now slowly getting into a cloud security, which leads to security angle, the cloud security. How my customer data is protected in the cloud, which link to regulatory, which is data residence. Most of the regulator today start embracing the cloud, and they are allowing the data flexibility in data residence to move outside the country. For example, Philippines and in Singapore and Hong Kong, they started relaxing the rule. Even Malaysia started talking about now to allow cloud so that your data don't need to sit in on-prem and it can move around the cloud as long as cloud securities are protected. So this advantage all supporting to innovate. This is what today the fintechs and the tech companies are funding for, because they are bringing last 5 to 10 years of technology experience and the technology investment. And now either a telco or a financial services companies now taking this latest technology advancement, trying to solve the ground level customer problem with hyper personalization. That give you the, which I said earlier, which this technology solution plus the customer centric design, giving me the low CAC as high profit when I selling the high profit product through the technology solution, using technology as a platform and a vehicle to sell the customer centric product and services with the high profitable products, which can be lending product, it can be payment products. But of course, now with the bigger focus available, working with e-commerce, because everybody now it's remote. So e-commerce platform is one of the big revenue channel to integrate with them and accelerating the financial services within mass affluent, emerging affluent, and financial inclusion. I think that is the way forward to attract Southeast Asian market and Middle East market, which is going to be a new game changer, capturing e-commerce and financial inclusion problem solving with demographic specific use cases. It's the end of the day, we need to solve the real human problem. There is a lot more to make money, and technology is one of the tool to open the door. Thank you, Musa.
Most welcome, Ramu Bey. It is today. It is very nice to hear from Asia 3 speakers together now. One message I would like to share with you: very good seminar, high quality and valuable content, really impressive, well done. Great job for us. Thanks, Kaiser Jabir Bey, for your kind messaging. And now we are almost ending, and we are exiting 5 p.m. My local time. And I don't guess Singapore, Ramu, you need to go dreaming a little, but now lastly Europe join us. So far we heard about all three big region, I mean MENA, Africa and Asia, but now Pedro Bey coming from Europe, and then we would like to hear both his speech and his conclusion remark in one time, because we are closing as well. So Pedro Bey, most welcome, Mr. Pedro. As far as I know, you are Lisbon-based Portugal Fintech Association, one of leader as a board or member or chairman. I am not sure, but if you make a little more about you and about Europe and Portugal local market, about fintechs has some suffering points from technology or central bank or banks allowing them or helping them, central banks including central banks. What do you think in this issue? Because neobanks also coming, I think Europe is one of the region that neobanks licensing more easily according to the other regions. We would like to hear from you.
Thank you, Mustafa. First of all, thank you for the invitation and congratulations for organizing a very interesting event, and sorry for being a bit late on this panel. Yes, I mean, Europe, as you know, has already been around in terms of neobanks for some time. I personally have followed the sector since the 2013-14, and I had the benefit, apart from being the chairman of the Fintech and Insurtech Association in Portugal, to have quite a bit of exposure, as I had in the past set up a digital bank, basically on the back of partnerships with fintechs. Obviously, everyone now talks about it, but before, back in 2015-16, was not that common. So we took that risk and we benefited from it. I would have to say that fast forward 5-6 years now, and there are different outcomes which are quite interesting to analyze. So basically, as you know, this tendency to create neobanks started back in the US in early 2010 with the refreshing idea of customer experience being similar to the big techs, the Amazons, etc. So people were eager to have much easier interaction with their bank. And in Europe, particularly starting in the UK and then sooner afterwards in Europe, the new neobanks starting popping up. We have seen now, obviously, the incumbent banks catching up by basically trying to recreate their interface with clients and becoming much simpler in the way they interact. And this obviously has accelerated much more now, even with COVID. People that were a bit reluctant of using these digital means, even older citizens, now are finally learning how to use these digital means so they don't go to, obviously, branches. And we have seen a closing of branches in 2020-21 higher than any other time in the past. So this is something that we are not going back to. However, there are restrictions. I would say that one of the issues regarding the European Union is that although from the outside it looks like it's a one market, but unfortunately it's not that simple. And that's why some players have struggled to grow as fast as one would expect. The likes of Revolut, the likes of N26, the likes of other names that you have heard, Sterling Bank and others. First, it was the Brexit. So some players that were UK based, they were faced with the fact that they needed a new license to operate in the European Union. And secondly, regulators were becoming quite strict, particularly on the KYC and AML. So the processes with some of these banks, new banks, were so simple that they I think they overlooked a bit the AML situation. So they had to step back a bit and create compliance teams that are now also quite big and an expense to these players. And then another aspect is that not only we have obviously different languages across the whole continent and cultural differences and different market nuances in terms of competitiveness, but also the regulators sometimes behave differently. Or although we have the European Central Bank as a European regulator, then you have the local regulators that like to give a bit of a different taste and a different understanding and interpretation of sometimes the regulation that is recommended by the European Central Bank. So I would say, for instance, on the typical remote account opening that we are talking about, all the digital banks now allow you to open an account remotely. Some countries are harder in terms of processes to do this than others. And they have different ways of dealing with the clients. The other aspect has to do also with the expansion. So the investors have seen that some banks will not be able to create critical mass. So these banks initially started by getting number of users, and they really didn't have an interest. I mean, I would say a business case that would allow them effectively to bring revenue. So in order to bring revenue, a number of them had to bring credit risk associated with it because they typically charge very low commissions. So I would say now coming to credit, obviously with this situation as COVID arrived, obviously it would not be effectively the right time to grow the credit portfolios and to bring net interest margin to the banks, to these new banks. I would say this is another difficulty because we see these neobanks expanding very fast, but they need to pay very dearly to attract customers, number one. And number two, they have to cross-sell with other products, namely credit, which now is a bit more complicated as we have seen during the pandemic period, although some governments have supported their population in terms of keeping paying or doing moratoriums to basically suspend the installment payments for a while. But obviously we need to know when this is going to end, and hopefully it will catch up the moment it will end. So I'm saying it's not been a free ride. So I see going forward a very clear path. I think we will see a lot of consolidation, and we will see probably just a few players that will ultimately get to the finish line. And I would say that the remaining markets, particularly emerging markets in Asia, in Latin America, and even in Africa, have probably higher prospects to grow faster because they have a bigger unbanked and underbanked community. And for them, it's easier to adapt these new players as opposed to markets which are overbanked, where clients also are a bit older and a bit more reluctant to change. And even the central banks also make life difficult sometimes for you to move from one bank to the other, because as you open a new account in a new bank, you have to go through the whole KYC if you didn't exist. And that's one thing I've been advocating, is that if you do already have a profile of KYC, the central bank should allow you to move swiftly without having to do the same questions you answered to the previous financial institution. So we should have a database of KYC, the way we have for credit, for instance, where we would only be doing this once, and then we could open an account or two accounts or three accounts without having to resend and these compliance teams having to reanalyze the information. Unfortunately, right now, each time you open a new account, the bank is going to ask you exactly the same thing according to the bank regulation. So that's a limitation, I think, everywhere in the world. But I hope that soon regulators will realize that this is a burden that could be easily avoidable if we keep a database, a centralized database, where the client actually allows you as a bank to access our personal information to make a quick due diligence on you effectively. But just to keep it short, I think we are going through some transformation. There are opportunities, but obviously I would say the compounded growth that we see in Europe will not be as fast as in the emerging markets I referred. And obviously the incumbent banks now are being very smart, a bit like Ramu said, in trying to bring these microservices to themselves instead of reinventing the wheel again and again. So there will be technological changes, and even large banks can bring this technology to them. And the players that have core banking systems that are modular are the ones who are going to be winners by providing modular services according to your need, whether you're banking a private individual, an SME, or a large corporate. Then things will be much easier for these banks. Obviously, some incumbent banks have not yet been able to interact with these fintechs because they are usually more tending towards more development themselves, but ultimately they will lose, because the moment they finalize the development, there is already a new technology out there, much more interesting than you developing in-house. So that's the shift now we are seeing. And I think that I believe there are still a number of banks which have not realized they have to change from an IT model to more of a fintech partnership model, basically. That's what I had to say, and I hope I contributed well. I know we are quite late now, 15 minutes ahead, but Mustafa, I don't know if you have any questions on any other of the members of the panel.
Most welcome. Thank you, Pedro. Even you have excuse and you joined. Thank you for your joining as well. We would like to hear from Europe, and thank you this summarizing really so far. I see you. I was thinking Europe is unique, but I was not thinking about the difficulties of culture, a French and a German and a British, but British already escaped from the Europe, but somehow still in some subjects in mutual operation strategy. I mean, so just you remember me. It is not easy, and everything not easy as Europe to say. Yeah. So even you are, I think in Portugal is different language, very different culture, and as south of the Europe. Yani. So now we are concluding. Thank you all. This is really a kind of amazing meeting for me. All speakers, as you trace in WhatsApp, we are forming a Fintech CEO Club, and really also thank you to your sharing in Fintech CEO Club, because as Fintech network in worldwide we are growing for important sharings to each other in this WhatsApp group, and we are growing email list as well. Our email list now reached 360 important exclusive people in the email list, and we are sending one email to these people. In this fintech, as I always say, two big words, including finance and technology. To manage these two words, I mean, not manage to learn more. It is hard, big subjects, so we need to exchange each other, our knowledge and point of views. So at the end, I would like to say again one more thank you to Hani Idris Bey, because many time I saw idea makers always neglecting, but I am in reverse. I always respecting. What I mean as idea maker of this event, I would like to send my respect to Hani Idris Bey. Please accept this as idea maker is important. We should share them. So Hani Idris Bey, shukran. Thank you for this
Thank you.
event that you are thinking, and you name it the event also. And then I would like to give the last conclusion speech. Our Faster community, one of the leader, and she like Faster community at the beginning. As sometime I said, kind people. You are really kind people. As this event shows that how kind, knowledgeable people, innovative, informative people you are. I like to mention this kind people as you. Thank you all contribution, and I want to give for closing speech, Dr. Safa Hanım, please, if you close the event, we would like to close the event with your conclusion.
Thank you again, Mustafa Bey, for this opportunity, and thanks for the colleagues here for sharing their knowledge. And they, as you said, they are kind to share their knowledge and innovation and the digital knowledge that they have. And I think that increasing the database that we have of the different fintech CEOs, we will maybe be able to advance more our each one in his own country. But we need still extensive research about fintech and the scope that it can be done, and how what are the benefits for the customers, for the firms, for the bankers, for the different sides in the world, and we also be able to include the unbanked people, how to do the inclusive financial strategies in order to include more people that can benefit from these technologies. It's so important to think about these other people, and that there are more awareness about in order to trust the fintech, because one of the biggest challenges is the trust from the citizen to use the banks or to use any financial technology. So much awareness should be done on that. And as our colleague lately spoke about the eKYC, it's the electronic know your customer. It's so important to facilitate the services and not go back always to paperwork and make procedures so difficult. So I'm sure that fintech will make our life easier and will make us more happy, I hope. So thank you again, and hope to see you soon in the next meeting. I think our next meeting will be the 8th of September. And as you always say, we invite everyone to participate and make use of this lectures or these meetings, these discussions on the YouTube channel of Faster Communities. I am so proud to be part of it, and I learn a lot every day when we do the meetings. So thank you again, and hope to meet you soon.
Thank you all. See you next event. Thank you for your all